Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your Thursday update for August 25th. Well, to put it mildly, we've had a heck of a week here in the mid-Atlantic. We had an earthquake and now we're facing a hurricane. And on top of that, Warren Buffett buys $5 billion worth of Bank of America stock. Rallied the market, obviously dramatically, but the market's coming back down. And it basically tells you that the trend is your friend, and the trend in Bank of America and in the other financials is down and negative. It's going to be very interesting to see how we close out the week. Tomorrow with Ben Bernanke speaking, I don't think it's going to make a whole heck of a lot of difference. We've had 4 weeks down in a row. It's not unusual to have a reflex rally, which we're seeing this week. That's where we close for the week. It's going to be very interesting. So let's go to our first chart, and we're going to go to our portfolio as we normally do, looking at the S&P 500, which is down 1.5% right now. And you may remember in our previous comments we were saying to short this market right around the 176, 177 level, simply because that was an area of a retracement for the S&P 500. We're looking at a weekly chart. I'm going to go to a daily chart to give you a better idea of today's action. And today's action is not good. And certainly if we take out the lows, yesterday's lows right around 1156, that would be a pretty negative market. We're currently trading a little higher than that, and around 1160. So I think you want to watch this market very carefully, because I think we've seen the little pop. I think we'll see this market come into pressure next week. And if Bernanke does anything or nothing, I think the market's still going to come under pressure. Things are still not good in the U.S., and they're certainly not good in Europe. So let's go to our next market to tell you the truth are the trade triangles. Monthly down, weekly down, trend down. It's as simple as that. So let's go to our next market, and that's going to be silver. Silver has a lot of pressure. It's come back up today. It's trading around 40, and we were looking for a retracement level. Let's just put our little retracement Fibonacci numbers in here from the highs. You've seen me do this a lot before. And we just drag it down to the lows, and you can see 3970 looks like that was a Fibonacci retracement. We went a little bit beyond that, but we've certainly come back up. And I think we'll see more of a two-way market as this sort of market sort of gathers its breath. It's had a lot to digest here. But you also have, if you remember, if you saw last night's show, we talked about this 61.8% retracement this level represented. So I think we'll see more of a sideways trading market as opposed to a straight up trend here. So let's be patient, watch this market. But the longer term trends, weekly and monthly, are still positive. Short-term traders should be out of this market right now. And the same goes for gold. We're going to go back to our next market. Gold, which was under pressure earlier on today, has sort of come back. It's regrouped. It got down to levels that I think a lot of people were very surprised at. We could trade down as low as 1712. If we put the Fibonacci numbers in, you'll see that we're pretty much looking for a pullback to around 17, possibly. The market's come back up. I think we'll see more of a two-way market in this particular market. But this market has to regroup. This is on a weekly basis. We're going to look at the weeklies here. You can see this is called a dark cloud cover. And we need more confirmation maybe next week to see how this is going to play out. But right now, it would seem to me that gold, at least for the moment, has put a top in. We were expecting a top in Q3. I think we may have seen it, but we need more evidence to confirm that for the moment. But generally speaking, longer-term traders should remain long gold. Intermediate-term traders should also be long. Short-term traders should be out of this market at the time being until we get more clues. So let's go back to our next market. And that's going to be the dollar index. Dollar index is flatter than a pancake. This is a weekly chart. You can see, just look at this. This line is practically flat, as is the bottom line. I mean, that's just nothing going on there. We've talked about the 73.50 level being a very, very important support area. It continues to be an important support area. And obviously, we're trading at 74.29. And the market appears to be a little bit higher for the week, but not very much. So let's just go to our actually a bit lower. It's about even, I guess. We closed last week at 74.27. It's 74.29. So I would say flat for the week so far. But tomorrow is going to be the kickoff of this market in terms of what Bernanke says. So next market, let's go back to a daily chart and go to our next market, which is going to be the Reuters Jeffries CRB index, and as you can see here, we had the negative engulfing line here. We closed lower today. I still think that inflation is going to be in the picture somewhere along the line, but it may not be ready to go up yet. So let's watch the market. All our trade triangles are negative, indicating the trend is down, and it would seem as though we'll see this market come under further pressure, perhaps tomorrow and perhaps later in the day. So let's go to our portfolio, and we looked at the normal 6 markets. Let's look at Bank of America, because this had a really big pop today. Obviously, you can see Warren Buffett came in. He's going to invest $5 billion in Bank of America, show us confidence. Well, that's a little bravado, because the reality is he's getting 6% on his money. Are you getting 6% in your money for almost a guaranteed investment and getting warrants? No. Warren is looking after Warren, which is fine, but he's got so much money he has to invest somewhere, and getting 6%. He did a similar deal with GE and when they need the money. But quite frankly, I think that's a negative thing. I really think that's a negative picture for Bank of America. This little pop we've seen, I think it's probably an ideal time to go short. Depending on how we close today, I think this market could be under a lot of pressure. So here we are. We closed last week, Monday, Tuesday, Wednesday, Thursday. We closed right here last week at 686, which is a low close for a week, and here we are, we're trading at 754. So it's not up that much percentage wise, yes, but it's not up that much. And tomorrow, if we close lower tomorrow, certainly if we close down around 7, that's extremely negative for Bank of America. We're still bearish. I think there's a lot of problems there. The market's telling you there's problems, and if you look at the longer term trend, which we can easily do with MarketClub, we just scope this out to max. You can see the trend. Let's take the weeklies off, the weekly triangles, but you can see the trends begin going down, 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 and we're going to test, I think we're going to test the 5 level on Bank of America. So it'll be interesting to see how that plays out, but you have to understand Warren Buffett is not always right all the time, so he's not God when it comes to the markets. Let's go to he has a good track record, no question about it, but he's not right in every investment he makes. So let's go to the next market, and that's going to be Citi. And Citi is up today, but look at the numbers. It's minus 75. The trend, even with the rally, I'll have to get much closer with Citi because it's been disastrous, but here it is. The trend is still basically negative. Weekly and monthly are still, even with this rally today, it's still negative. And here we are. We closed, we're up on Citi 98 cents. Which is approximately, what are we looking at? Maybe 3.5%, but it's still not that great a close. And I think depending on where we close tomorrow, after Ben Bernanke comes in, it's going to set the tone for the following week. But I think generally speaking, this high that we've seen right here is going to be a high to watch very carefully. And if we are going to turn around, which I don't think we will, because you can see if you just draw a line from where we were here, it just stopped pretty much where it should have stopped, and now it's coming back down. It's on the lows of the day. So I think we can see this market coming under further pressure later in the day, but that remains to be seen at this point in time. So lots going on, and I think one thing was really interesting. We had some questions last night. Wells Fargo, by the way, we think is a little bit different in terms of stocks. We think that's actually probably one of the better banks, but still that was really took a big jump up. It's coming back down, and again, all of our triangles, and this is the great thing about trade triangles, they're not going to juice you up and say, oh, buy here, sell here, just get you all excited about things. They look at the market, what the market action is doing, and you can see right now the market action is rallied up to around 26, and now it's trading at 24.40, not particularly dramatic. And if we close lower on the day in Wells Fargo, I think it's going to be a negative situation for the banks in general. So let's go back to our portfolio. Hewlett-Packard we talked about, that's a disaster. The SKF, we had a lot of questions last night on the SKF. This had a big jump this morning. You can see it pushed right down. They try to get some stops out here, rallied back up. The market's now higher on the day, and it's up about 2.5%. And I would say if it closes higher, I would say ideally I'd like to see the market close over this level here, the high, which was 82 and change. I think that's probably not going to happen, but the reality is it's coming back up. It's closed. If it closes up here, it'll still be closing very well. And I still think this market's going to go considerably higher, perhaps even to 100. All the trade triangles are positive. That's what you have to remember. And trade with the trend. The trend is up in this market. Even though we had to pull back today, it is still up, and that's the important thing to remember. So, hey, this is Adam Hewison. By the way, we had a lot of calls last night. Thank you, people who watched the show, and they were asking about our one-on-one Market Club personal coaching. This is a great thing for anyone that wants to improve their trading and learn how the markets really work. We give you some tools to work with Market Club, and also you've seen me do these 1 p.m. updates and also the show. But this is much more in-depth. I think you'll get a lot more out of it. You actually have somebody working with you. But what I recommend you do is just give them a call. You get free information. See if it's right for you. Just do a personal consultation. It's just not going to cost you anything. See if it's right for you, and see how you can improve your trading with Market Club, doing it our way. So the number once again is 1-877-219-1482. Give them a call. I think you'll get a lot out of it. So hey, this is Adam Hewison, battening down for a hurricane, and we'll talk to you tomorrow. Have a great day.